SoundHound AI stock on Thursday crashed over 15%, as you can see right here, 15.76%. After hours, it's now even down 4.49%, has a market cap of now under $2.5 billion. Now, year to date, the stock is still up over 200% based on AI hype, an investment from NVIDIA, a partnership with NVIDIA that we've discussed a couple of days ago. But despite that, I always told you that one, if you bought since the first time I covered this company under $2, it is 100% okay to take profits. Two, EV to sales 35.4 times in the next 12 months is extremely expensive. It was even closer to 40 times. Now, for those of you that think that making projections based on 40x, 60x, 30x EV to sales for the next coming years, even with the growth rates or the expected growth rates from Analyst and even from the company's own outlook, right, for fiscal year 2024, sales will increase or supposed to increase 51% and then another 47.8% in fiscal year 2025. Even with that, this EV to sales metric is extremely high. Usually what you want to see is between 1 and 3. That's the usual good one. But of course, with high growth companies, high margin companies, stuff like that, you will probably see it closer to 10 times sometimes, and NVIDIA it's even closer to 20 times. But NVIDIA is one of a kind company, so let's not compare SoundHound to NVIDIA, even though there are some synergies as we've spoken before, investment and partnership. But again, to think that such a small company, such an unprofitable company, to think that it is normal for it to trade over 30 times, even for a longer period of time, is just wishful thinking. Now again, this company could become profitable in the future, but right now, throughout its close to 18, 16 years of existence, it has only burned a lot of money. Yes, it's true that in the recent years, they've changed a bit of their business model. And now more recently with all the AI revolution, stuff like that, partnerships, maybe their business is accelerating faster than before and they're going to reach profitability faster than expected. Remains to be seen if that ever happens. Now, one of the reasons why the stock went down is because of an analyst downgrade, actually a double downgrade. So the analyst went from overweight to underweight and cut the price target from $5.8 to $4.9. The reason why it is difficult to justify due to infancy of SoundHound's business, opaqueness of its operating model, decelerating organic growth, lack of capex spend, loss of customers, and growing competition from big tech. He also says here with regards to guidance, which is approximately 50% growth for 2024, that also includes inorganic contribution of its Sync3 acquisition, which we believe likely adds north of $5 million of inorganic revenue in 2024. Thus, on an organic basis, we believe revenue growth will decelerate in 2024 relative to 2023. That was one of the reasons why the stock went down 15% and is down another 4-something% after hours. The other reason is a short report, basically saying that SoundHound lies, damned lies, and cheeseburger AI, and a price target of $1. This comes from Capybara Research. They really are quite creative with these types of names. Now, I've highlighted a couple of things I want to talk about with regards to the short report. Some of the points are completely legitimate because it comes from SoundHound's own filings. Some of the others are just assumptions that they're making right now that could definitely change in the future. So before jumping into that, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, they first start off by saying SoundHound is a failing company peddling lies and deception. It reminds us of the old saying, lies, damned lies, and statistics. Except, in SoundHound's case, they don't provide statistics because no amount of massaging could make the numbers look good. After extensive research, we have taken a short position in shares of SoundHound AI. This report represents our opinion and it is not financial advice. Don't take financial advice from strangers on the internet, including myself, by the way. Do your own due diligence. Please read our full disclaimer at the bottom of this report. So, they first off talk about and name a couple of points here with regards to the AI part of SoundHound AI. 1. SoundHound's AI product searches Wikipedia and returns scraped content. I'll show you a couple of examples later on. SoundHound speech recognition tech is a commodity service that competes with comparable products from Amazon, Google, Microsoft, Apple, Cerence, and many others. SoundHound has admitted as much by removing claims about the superiority of their products from their recent 10Q. Then, company health. SoundHound is hiding the fact that it has lost some of its biggest customers, including Mercedes-Benz, Deutsche Telekom, and Netflix. Again, I'll show you examples later on. When SoundHound lost Mercedes as a customer, they received payment for the contract modification. SoundHound recorded the contract modification as payment as product royalties, which made the company appear healthier than it actually was. They continue by naming here a couple of other points. If you want to pause the screen, I slowly scroll down so you have a lot of time to pause and read or screenshot. Maybe I'll just leave the link of the short report in the description below. Then they say here, on the fiscal year 2023 earnings call, management was unable and unwilling to answer simple questions about the company's performance, including the number of devices using their tech. SoundHound's biggest competitor, Cerence, provides detailed metric about the number of devices using their tech and their market penetration. SoundHound refuses to provide any such metrics. To me, this is a big orange flag, not gonna lie. The more metrics a company shows me, the better. And then when a company removes metrics from earnings call, from 10Ks, whatever, that's also a big red flag, unless they replace it with something else that adds a bit more context. Moving on to accounting problems and red flags, bookings are presented as likely future revenue, but in reality it's a farce. Bookings are not based on existing orders or contracted purchases, but rather management's fictional projections. I've talked about this quite a couple of times. Some of you answered in the comments to add a bit more context, which I appreciate quite a lot. And this is with regards to the change here in the name or the definition of their own bookings backlog, because now it's a combined cumulative subscription and bookings backlog of $661 million, represents a 2x increase year over year. The first time I read this, I told you, in the video, I found this extremely strange that suddenly they combined both of those things without really adding quite a lot of information here. Then, of course, in the earnings call, they explained a bit. Someone commented as well. I pinned it in that video. But if we scroll all the way down in the definition part of things, they say here, subscription backlogs referred to potential revenue achievable for the company with current customers where the company is the leading or exclusive provider and assuming a 4-year ramp up during which time our technologies are being implemented and assuming a successful full rollout of our technologies over a total 5-year duration. Again, this is about potential, which means nothing here is certain. There is no obligation of those customers to actually pay more money in the future or pay any money in the future for that sense. So it's not like a backlog, for example, that ASML has, right? A 36 billion euro backlog. That's a real backlog. Here, it's a backlog that calculates potential. So a large part of those $600 million is just fugazi, it's a wazi, it's a woozy, it's fairy dust. So when we go and look at the business outlook for 24 and 25, right, for fiscal year 2024, revenue will be in the range of $63 to $77 million, midpoint target $70 million, a bit like what the analysts are expecting. Then, for fiscal year 2025, they expect growth to accelerate with revenue exceeding $100 million, achieving positive adjusted EBITDA. If they can achieve positive adjusted EBITDA, that would be great, because if they continue to lose that much money, they won't survive for that long unless somebody acquires that company. But exceeding revenue of $100 million, again, we don't know if these are true numbers or not. We don't know if this is including the termination fees, if this is including some other fees that is not really going to stay with the company for quite a while. This is a big issue. Then, going back to the short report, in 2023, SoundHound's auditor, Armanino LLP, resigned and quit auditing public companies. Armanino was the auditor for a number of known frauds, accused frauds, pump and dumps, and failed SPACs, including FTX, COSM, LTRY, and a couple of other companies here as well. Another orange flag if you ask me. EPS loss has gone down only because shares outstanding increased so much. I'm sure you all know you're all getting diluted quite a lot for quite a long time actually. For the company to survive, they usually have to dilute shareholders to raise some money. We've seen that with a lot of unprofitable companies. This is nothing new, but this is certainly something to keep an eye on. Then going into the examples here, they call it SoundHound's Cheeseburger AI. They themselves, SoundHound, say here, we combine this with the most cutting-edge large language model like OpenAI's ChatGPT to deliver the most accurate, timely, and comprehensive responses. So they went and tried. So they asked a couple of questions here. Who was the first president of the United States? And apparently what they found out is that, well, SoundHound AI simply searches Wikipedia and returns script content, which again is something that a lot of companies, even you yourself, can program in a matter of hours. They talk here about the fact that their largest competitor in the automotive space is spending way more on R&D. This is also one of the points that the analyst made, and you can clearly see this here. Serens or Karen, I don't know how you mentioned that, but they are spending basically double of what SoundHound is spending. Then with regards to losing customers, so we have here a couple of examples from SoundHound's 10K. So SoundHound disclosed that keeping these customers was critical to the company building a sustainable business. Okay, makes sense. Then with regards to Mercedes-Benz contract, apparently they emailed the competitor and they basically said that, well, in reality, SoundHound was a tiny part of the system and is no longer included at all. The contract was won by Serens, SoundHound's competitor. Here is the email and here is the reply. In the 2022 10K, they listed their key strategic global partners. Then in the 2023 10K, they removed all customer names. Usually when that happens, it's probably when you're trying to hide the fact that you probably lost a couple of those names. Then talking about those one-time contract modification payments that will inflate their revenue and margins, it is also here in the statements. So the increases are partially offset by recognition of $4.3 million in non-recurring royalty revenues. They call it non-recurring royalties revenues. It just doesn't make much sense to me. Then moving on to a part that a lot of you probably know already, because we've talked about that with regards to Palantir, with regards to SoFi, with regards to a lot of other companies as well. And that's the part that analysts play in. Analysts pumping everything AI. So out of 6 analysts who revised and issued price targets following the disastrous report, all of them have direct financial ties with SoundHound. As you can see here on the screen, we're talking about Landenberg Thalmann, Wedbush, Northland Securities, D.A. Davidson, Cantor Fitzgerald. So, Northland and Wedbush, payments for advisory services. They received substantial payments of $500,000 and $750,000 respectively in April 2022 to become advisors to SoundHound. And the analyst at Wedbush here is Dan Ives, has an outperform rating, price target $9. Underwriting activities. As reported in the firm's 10K, H.C. Wainwright, D.A. Davidson, and Cantor all acted as underwriters for SoundHound's ATM facility. Also, half of the analysts changed their price targets before the 10K was even filed. There is zero logic that goes behind these price targets. This is just 1999 all over again. And I agree, I've talked about this not just for SoundHound, right? For many other companies out there. Analysts that have updated their price targets before an earnings report, before actually looking at the numbers, to me, make absolutely no sense. There either has to be a financial incentive or they just want to join the hype because, I mean, sometimes why not wait until the earnings report is out, until you've seen all the numbers and until you've read everything, then upgrade your models or downgrade your models depending on the company and the results, then come out with a new price target. Sometimes it just doesn't make sense, which is also why companies that have direct listings, such as Palantir, don't usually have such favorable coverages by analysts on Wall Street, because they did not participate in the IPO since it was a direct listing. So, going back here to SoundHound AI. Right now, the stock is, well, closed the day just above the 20-day moving average, but we know that the stock is down another close to 5% after hours, so it might be staying under that tomorrow on Friday, remains to be seen. Then we have the 50-day moving average at just under $5 at $4.83, and the 200-day moving average at $3.16. This is on the daily. If you look at the weekly, you see that now with that huge drop on Thursday, we are not overbought anymore. But again, look below if we go under that 20-day moving average. Overall, the short report does make a lot of good points, right? We've seen it. It's things that were mentioned by SoundHound, written in their own reports, and you can just add one and one together. You're not getting two, you're probably getting 3, 4, or 5, because it adds potential future revenue that might never exist. It's a red flag. Even if you're an investor, you have to acknowledge that these things don't make sense. On the flip side, I do have to say that recently, with the investment of NVIDIA, with the announcement that they've made, right, 2 days ago, with NVIDIA, with their tech in the car, talking about making the experiences in the car better, I do think there is some legitimate tech behind that company. Maybe it might not be the best of the best out there, but I don't think it's a scam. Now, again, by saying I don't think it's a scam, I don't also mean that, okay, it's a buy at any price. No, as I said in the previous video, I told you, the stock is extremely expensive. Don't be surprised if we go down quite a lot, because the market will realize that, oh, this is quite expensive and they're not profitable, and maybe they are not going to grow as fast as expected, and so you're going to take a hit. For those that bought under $2, you're still in major green here. For those that bought at 9, let's be honest, you bought, you gambled, and you lost. I also lost some money with gambles. No shame in that. Take your losses and move on. Unless you truly think that this company is the next best thing and will be a huge success in the years ahead. Only you can decide. I just wanted to share here my thoughts. I wanted to share this short report with you and the analyst comments, so you know a bit more about why the stock is going down. Of course, do share your comments and feedback in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you're not, and I'll see you all in the next one. Bye-bye.